When I look at Europe, there is still some scope for domestic consolidation. We saw lately that one was announced, which is reinforcing my view that sooner rather than later these things will develop and go. Europe needs stronger banks, banks that are able not only to compete in the regions but also globally, banks that are able to stay close to clients and help them to grow their businesses and stay close to households in managing their finances. So the competitive landscape is very fierce, not only in the banking sector, but also coming from non-banking financial institutions, from technology companies. And in order to have all the resources necessary to stay competitive, banks need to create economy of scales. That's inevitable.
Recently, though, we are seeing the European banking sector returning to profitability. 2023 was a change in the tone for European banks. But as we approach this new rate cycle where we're likely to see the ECB cutting in June, you're expecting the Fed to cut as well, are we going to see an end to this profitability on European bankings?
I don't think an end, but for sure, what you saw in the last 18, 24 months was a normalization of what how a bank's profitability should look like. A good mix between a margin on credits, but also margins on deposits. And what we saw for years during the QE era was a distortion of what banking is all about. So in my point of view, we are seeing now a normalization. If rates comes down, of course, you're going to create some headwinds to profitability of banks, but hence we go back to what I discussed before. So banks need to continue to be profitable, healthy and profitable. That's the only way, by the way, to have a stable financial system.